what's up, everybody? You know what it is. It's your boy, Sebastian J. Sanders. We are back with another episode for the Money Monday series. Let's get right into it. But before we do me a huge favor. Do me a solid. Like, comment, subscribe. Join the family. I want to hear from you. Check in with your boy and stay up to date on all videos releasing. All right, let's get right into it, man. Guys, today we're going to talk money. You know what it is, Money Mondays, right? We talk money on this show, and we talk real business. And so I want to talk to you how to run your financials before your profit. You got to understand where the money is going. Money has to work for you, but you have to understand in business exactly where the money is going, where is it being allocated to, and how do I set up a system before I profit, all right? Most startups do not fail because the idea was bad. They fail because the systems are bad, right? And so here's just a few things that I think are examples of systems and the way we should look at it, right? You got your office set up, you have your financial dashboard, and then you have your founder reviewing numbers. This is how you lock into a system to run your financials. You need to have a setup to where you go in and you're looking at your financials, whether it's on your iPad or your laptop or your home device, or maybe you got a suite that you rent out, or maybe you go to the coffee shop every Monday. You need some type of format or setup to where you can lock in and run your financials. Then you need a dashboard. You need the QuickBooks. You need a spreadsheet. You need something. That way you can see exactly where the money is going. And then as a founder, you need to be reviewing your numbers periodically. If you don't know your numbers as a founder, how do you expect people to want to believe and trust in your business if you don't even know where your numbers are at? All right, stop running your business like a personal account. Your business needs infrastructure. Here are a few key points. We got to get away from Cash App and Zelle. We have to get away, especially if you want people to take you serious. Now, in certain instances, when you're paying for like specific services or you're charging, I can kind of see how Zelle is allowed because it's a lot faster, right? And it's a lot more efficient because it's backed by banks. So Zelle is one of those, it kind of just depends on the transaction. However, if I'm buying from you and you say, hey, just cash at me, to me, that may come off as a turnoff. Now, this is kind of it's kind of a contradiction because a lot of my young people that I teach at the Young Billionaires Club, they happen to have Cash App. However, a lot of times they don't even really have their own bank yet because they're not of age. So essentially for a younger person, it makes sense. But if I would say maybe you're the age of 18, you should have an established bank account. You shouldn't be accepting everything from Cash App. At some point, we need to go out and get a business bank account. We need to go out and get a Square reader. And I believe the Square readers are free. And as I'm taking my transactions, you tap like you tapped at a restaurant or a store, and I get the transaction based off of that. So here are a few you need to set up. Square. Square is probably one of the easiest platforms, probably one of the most popular ones that you see everywhere you go. So definitely set up a Square account. PayPal Business. PayPal Business has a business division. It's credible. It's has the verification of your business. So it's probably one of the easiest ones to set up as well. Stripe. You want to do Stripe, and then you have Shopify Payments. So depending on exactly what your business is, if you're a photographer, maybe you do Square and PayPal Business. If you're selling something online, you do Stripe. If you're selling something via Shopify, you do Shopify Payments. All of these are established institutions where your money is not your money, but your system is set up to where you have a dashboard. You can see sales, you can see the revenue, you can see orders, you can track everything centralized in one area, and that'll be a lot easier for you to understand. Go back to what I said. You need a workplace setup, you need a financial dashboard, and that's how you review your numbers. The next thing, or really the first thing you should do, you should open a business checking account immediately. I know Wells Fargo has it, Chase Bank, Bank of America has some small business accounts. Pretty much all major institutions have one. And then you can tap in with the credit unions as well. You can get a business account at the credit union, which is also probably more efficient if you're doing some local work because credit unions are literally owned by the community. I mean, you having a bank account at a credit union, you are a part owner of that bank. So you could definitely go tap in and open up a bank account there, business bank account. But you want to make sure that you have a system that you get the payments out of, but then you need to have a checking account that when you get it out of that system, it goes into that bank account, a business bank account. And then you want to create a professional invoice and receipt. This took me a while to do because I was young when I first started Sanderson. I was like, 19, 20 years old. And so, of course, there was no invoices at the time that I was doing. I was just, freestyling or whatever. But invoice everything. I don't care if it's $50 or $100. You want to make sure that you're doing things the right way and you keep track of those invoices. So whenever we're done with something, we bill our services, we get an invoice in. I send it to our admin. I say, hey, can we set this invoice up? Get the invoice, boom. And in my business, I had to have an invoice for everything, especially, because we don't like the the educational payments, you net 30, net 60, net 90, everything is invoice related. So a lot of what I do invoices all day long. That's pretty much how we get paid. And then I track everything via receipts, right? Especially in my nature of business, dealing with grants and contracts, you also have to kind of validate, the allocations of if we got $50,000, I have to show receipts of how we spent that $50,000, in specific buckets that we say we would spend it in. So get you an established setup, Square, PayPal, Shopify, Stripe. Open a business checking account immediately and start to professionally invoice. Guys, all you got to do is go on Chat GPT or Claude and say, create me an invoice with my company name. Put your logo and boom, you got it. You could go and canvas it. You can use a template. You can go in Word, go in Word and choose a template out of that. And then you got a receipt. You got a template. You got an invoice template. So it's not hard to do. It's just a matter of doing it. Why this matters? You build trust. You track your revenue. It makes your taxes a whole lot easier. And it separates the business from the personal. The reason why you need a business account, because let's say I got a personal account and I'm making thousands of dollars for my business, but let's say I still have a job and I'm paying bills. It's kind of hard to see the total business revenue because it's all going into that one account. Plus, you're still getting paid from your job or any other sources of income. So everything is going into one account. So at the end of the year, you're like, man, somebody, your accountant or your CPA say, how much money you made? You're like, I don't even know. And they ask you why. Well, everything goes into my one account, so I really can't separate the two. So now you don't even know if your business is making $100,000 or 50. Then you don't even know how much money you're making. So now you're not able to take the revenue minus and expenses to truly get the profit because you don't even know where you're at. So now you don't know anything about your money. You don't know anything about your business. You don't even know if the business is profitable. Now you see how we break that down and see how silly that sounds and see why most people don't know their numbers because everything is going to their one account. Separate it. There's nothing wrong with separating it, right? Because at some point, the goal is to grow. It's not always to be, where you're at. So if you're not trying to grow, you don't have the money going to a separate account, you can't get mad when things are not happening. You're not able to scale because you never put yourself in a position to scale. And honestly, customers will start to take you more seriously, and this is great data. This is great impact reporting for grants, loans, because at some point you may want to go get a loan. They may want to see financials. They may want to see, okay, show me your financials for the last 3 years. They want to see your tax returns. I know for us, some grants start to ask for tax returns, right? And so every year I make sure we get audited. I make sure, not an audit for us, but audit for the tax. I make sure we get our taxes done. That's reported to the IRS. I make sure that I'm actively working with our fiscal team who goes in and does like our reporting and contracting for specific grants. So I make sure I'm all over the numbers because if I don't know my numbers, I can't even apply for a grant to go out and get more money because we are not in a position to do so. And if I'm not doing things professionally, you're dealing with companies and corporations. They're not going to take you seriously if you're still acting like a mom and pop. So you got to ask yourself, do I still want to act like a mom and pop? Or I want to scale this to a real business. Separating the personal and the business money. You never want to mix. And as a nonprofit, when we were paid as an organization, it was never Sebastian Sanders. It was always the organization. So I ultimately had to get a business account before I even got my first check. I remember we opened a business account and I think I put like $20 in there and I just needed it because I knew money was starting to come in at some point and it wasn't going to be issued to Sebastian Sanders. So for me, I had to do it by default. Now, if I was young and I started maybe like a different type of business, I probably wouldn't have done that. I would put everything in one account. I'll be honest with you. But that's just what happens when you grow with your business, right? It's growing pains. You want to never mix the rent money, the food money, entertainment, businesses, expense, none of that. You never want to mix all of that stuff. What you do is you pay yourself. Let the money go into the business account. Take care of everything else. Take care of your staff, and then you pay yourself. Whether you're on salary, whether you pay yourself a percentage, that's how you will go about doing that. You want to pay yourself. What I tell people is, when I tell my young people is, I say, hey man, you get your money, right? And for my young people, they may not have a personal account and a business account. But what you do is to separate the two is, put some money in a checkings account, put some money in a savings account. And then as you're getting paid, you pay yourself. So if you get a check from Chick-fil-A, let's say you're a high school kid working at Chick-fil-A, and you want to put some money up into another account for a rainy day, for college, or for business, you would take whatever that paycheck is, and every time you get paid, you would calculate 20% of that, and you would put that into the account. You can do the same thing for your business. Like if every 30 days you're getting $12,000 from a landscaping company that you service or something like that. Let's say you work on the tractors for a landscaping company and you do the maintenance on their equipment, and every 60 days they're paying you $12,000 or every 30 days, whatever. and all the money's going to the account. And after you take care of all your bills and everybody else, then you allocate your portion. You take your 20 to 30%, and then you pay yourself out however you pay yourself. So essentially, you have two separate accounts that you're living off of, but your business money stays in the business. What happens when you don't? This is what happens when you don't. It's confusing on the taxes. As I said earlier, you're getting ready to do your taxes, but you don't know how much money you made this year because everything went into that one account in combination with all your other sources of income. So you really can't even accurately say how much money you're making. Now you may be saying a number that's too low or too high because you don't even know where the money is going. And let's just so happen to say you get audited or something like that, and then the books come back and you're like, hey, you reported 160, but technically you made 230. What happened to the other 70 that you didn't report, especially in for-profit ventures? Then you're like, well, I put the other 70. Well, and then it looks all confusing because now you have to explain to the IRS, I had all my money going into one account. So to avoid all of that, you don't want to get flagged for something that was just an honest mistake because you were being lazy. You didn't want to open up an account. It's confusing. Overspending. Sometimes when you have too much money in one account, you get to overspend because you think you have a lot. Then you realize like, ooh, I should never spent that. Like I bought this $3,000 laptop or something, right? And I thought I had the extra because it all went into this one account, but in reality, I didn't have $3,000 in my business to pay for that laptop. So now I'm in a hole, couple $1,000s. Now you're crawling yourself out of hole. That's the last thing you want to do in business, crawl yourself out of hole that you created. I know in business you have loans, you have credit, but you don't want to be paying $3,000 back for something that you done on accident. So start thinking about those things. You have no understanding of the actual profit. These are the things that happen when you don't know how to separate the two. You confuse on your taxes, you didn't overspend, you have no understanding of the actual profit, and all of your decisions financially are made emotionally. They're not made with a clear mindset, right? I feel good going into our business account and auditing, and it's okay, hey, we got this allocated, we got enough money to do this, okay, let's make those purchases because I'm seeing all the money come. If I got all the business money combined with my personal money, I'm all over the place. I'm not able to see how much, we can pay for a contract or certain things because everything is all over the place. I have no structure in my business. But then I'm over here trying to figure out, okay, how do I scale and get to $250,000 or $500,000 operating budget as an organization when I can't even handle a $50,000, $25,000 grant? So you got to start to say, like, does it make sense? And if it's not making sense to you, it's not going to make sense to anybody at the bank that you're trying to ask for a loan for, to somebody that's writing a grant or anything if you're all over the place. The important thing is revenue is not the personal income. We gotta get away from, I done made $100,000 in revenue. Yeah, I done made that. That's my salary. No. I mean, if that's how you run your business and you ain't got no other operating expenses, hey, more power to you. But it takes money to make money. So I'm quite sure when you making $100,000, it may take you $40,000 out of the operating budget to actually make that 100. So in reality, you probably only making 60. So you gotta understand, like, you got to know your numbers, man. I don't know how we can stress this. I never forget, TDJ said this. He said, people pray to be in my seat because they feel like, I forgot how he worded it, but he was basically saying, like, sometimes people pray to be in certain positions. But he said, if I gave you the problems that I had, if I gave you my budget, if I gave you my responsibilities, could you sustain it? And that made me think about my business a whole lot different because, like, I always say I'm in a critical growth phase and we're doing really well. But then I'm like, okay, how do we get to this level? But then I think about it. I'm like, okay, hold on. What if I got to that level, but I didn't know what I was supposed to learn in this season? But then I get there and I'm not ready to sustain it. And then it all goes away. And then, the thing about business is once you start to have like certain things that happen in business and they start not to go your way, and depending on what your product or service is, if it's external facing, a lot of that gets kind of like a bad look on the business. And I know for a certain, for the people we want to serve and the students we want to serve, we never want to have that public facing. And so for me, I try to make an emphasis on, if we're not ready for something, and I'm still learning this from God, I'm still learning this in faith. If you're not ready for something, be thankful where you are, because when you do get it, be thankful that it took you seasons to get there because you want to be sustainable. And revenue is not, kind of going back to what I was saying, revenue is not the personal income. Because you got to understand all of the dollars that are coming in. Do not say I'm making $100,000 as my personal income if my operating expenses, I haven't even calculated that. And that goes back to the example of you claiming one thing and you saying you got this, but in reality you're only getting this, which shows you're not ready for that next moment that you're trying to get to. So that, I hope I'm painting that picture for you to truly understand. Like, we want to get to certain levels, But then if we get those levels, are we able to sustain it? But then on the flip side, I keep saying I'm making $100,000 in revenue, where in reality, that's not my personal income. I haven't even calculated my expenses and my salaries in order to see the determining factor of how much money that I'm supposed to make in the business. So got to understand how you separate the two. All right, tracking numbers like a CEO. Track your best-selling products or your service. Track your spending habits for your customers. Track the slow inventory. Even the things that's not moving, track it. That way you know I don't need to go out and buy this no more. Look at your profit margins. I talked about that episode 1. Go back in and see how to price your product or your service. Your busiest sales periods, like if you know I'm making a lot of money December through January, then you know I need to up the inventory, I need to up the marketing. If I got a bunch of repeat customers, how do I keep them as repeat customers? Send them out some freebies or whatever. You got to understand the numbers. Get over ambitious in the numbers. Look at your Square Analytics. Look at your Shopify reports. Have that as like an automatic email that come to you every month. That way, it's not something that you can easily forget. Have it as a reminder in your phone. Okay, every third Thursday of the month, I'm looking at the automated reports on Shopify. I'm looking at my Google Sheets. I'm looking at my QuickBooks. I'm looking at my dashboards. Questions every founder should ask. What is actually making money? What is costing me too much? What product or service should be removed? And where is the money leaking? If you can ask yourself those questions and you can answer those articulate questions, transparent and honest, the best way that you can, you are in a great position as a founder and as a CEO. What is actually making money? What is costing too much? Where is my money leaking? And what product or service should be removed? Remember, going back to the last episode, we always have to adjust and pivot in our business. Build the systems before you scale, right? Build your booking appointments. If you're a barber, stop texting people saying, hey, come here at 3:30. Get a booking appointment, right? Then everybody has an appointment. Then if they don't show up, you can still charge them a fee. I was just talking to my nephew about this. I'm so proud of him. He has a booking appointment system set up now. So it's a lot easier on him. Invoices, contracts, inventory, customer communication, scheduling, follow-up emails. These are all the things that you need to build into your system. These are all key points that you need to have for your business. Here are another tools. You got Calendly, you have HoneyBook Google, you have Workspace Notion, you have Trello, you have QuickBooks. Guys, go tap into all of these. This matters because this saves you time, reduces your stress, it helps delegation, creates a sense of professionalism, and it prepares you for the growth. We're in a season right now as we're in a growth phase. I've been in a heavy system phase. Like me and my admin and our program coordinator, I built so many systems over the last few years because I know when we grow, in order to grow, you got to be able to track things and know where things are at. And so now I'm able to articulate our impact reports a whole lot better. Now I'm able to tell our investors and our donors, like, hey, this is where 30% of your funding is going. This is how many kids is opening up businesses. This is how much money we're investing into students. So now I can see things because I have a system. Now I'm prepared for the growth. And, an example of what happens when you don't, maybe you get double bookings from a poor schedule. You don't have a schedule, so you telling everybody to come at 3. Now you got 3 guys sitting in the lobby trying to get a haircut. 2 of them leave, so now they don't want to come back to you. You done lost 2 customers. Imagine if those were repeat customers that was coming to see you every month. You done lost 2 people that were consistent. Money down the drain. You lost orders because you're not organized. You sent out 50 orders, but then you forgot 6 that was sitting in your car. They've been sitting in your car for 30 days. Now the customers want their money back. Now they're doing disputes with the bank. You're losing money. You're losing orders. Customers leaving due to poor communication. You don't communicate with your customers. You don't do follow-ups. You don't do any of that. So people don't even know if the appointment is confirmed. They don't even know if you got their email. Now they just stop talking to you overall because you do poor communication. You see how all of those can prevent you from creating a successful business. And at the end of the day, goes back to everything I always say about entrepreneurship and business. This just separates the everyday hustler from an entrepreneur. My closing, what I want to talk about and my key takeaways, guys, is most businesses do not suddenly become organizational success. It takes them time. It takes them systems. But it takes the analytics, the data, and the report and the numbers to really grow. Treat your startup professionally. Create it with clarity. Systems profit and financial discipline create sustainability. Guys, you know what it is. It's your boy Sebastian J. Sanders. Guys, if you enjoyed this episode, like, comment, subscribe. Send your boy some topics. Let's talk about it. Follow me on Instagram. Follow me on LinkedIn. You can visit sandershand.website to learn more about my work and learn more how you can be involved with the Young Billionaires Club at Sanders Hand. Most importantly, I thank you so much for watching and rocking with your boy. Stay tuned for the next episode.